Hey, what's up, guys? This is Francisco with Valereso Capital, and I just wanted to go through a swing trade that I made in the SPY. I want to go through the reasoning of why I made this trade, of why I consider this a bullish opportunity, and I want to go through what triggered my entry, and also what was the reasoning behind taking profits today in the move to new all-time highs. So first of all, just start going through which was my position. So I traded this via call debit spreads. So I opened my position. I bought three contracts on December 22nd, and I sold my three contracts today at 3:30. And this was basically over 100% gain. You can see that I bought the contracts at 420, and I sold them at 8.61 today. So let's go through the reasoning and of why did I take this trade. So I took this trade on December 22nd, as you saw on the information that I just show you. I opened the trade right here on this day, and the reason I took the trade that day is because, as you can see, the SPY, right, we have the double bottom pattern. But what is really interesting here is that we have a double bottom pattern, and as you can see, we were testing this low here, but you can see that we were testing this low in a rising momentum indicator in the ready aim fire. We can see that we tested here, we were all the way down here, we were oversold. But the moment that we bounce and the moment that we pull back the second time here, we did it with a rising indicator, and we also did it with a rising squeeze. So that's what I call a bullish divergence, and that usually is a very interesting opportunity for the long side, because we have a lot of negativity here, a lot of shorts that had their stops somewhere on these levels, and that usually brings a high probability trade for the long side. So that was the first thing that I look at, and then what was the trigger for me to enter the position. So I decided to enter the position I just mentioned on December 22nd, and I did it after we took out the high of this day right here, and we move above the 21 EMA. The 21 EMA is the blue line right here, and as soon as we traded above that level, I opened my position for the call debit spreads. And as always, my strategy is pretty simple. I'm just basically looking for something that has a squeeze, and I'm looking for something that has a rising RAV indicator, and I'm looking for this transition from the red momentum to yellow momentum, which signals a transition from bearish momentum to bullish momentum. And then I'm just looking for patterns. So I open my position as always near the 21 EMA, and I'm always looking to target a move to the 2 ATR level. As you can see, this is the what I call the mean, the 21 EMA. We have the 1 ATR level, which is this black line here, and the second line here is the 2 ATR level, and I'm always looking to take my profit somewhere around those levels. And I'm usually looking to have my stop somewhere around this -1 ATR level, and that most of the time gives you a 2-to-1 risk reward, and that's what I'm looking up here. Once again, I bought these contracts. I bought these contracts for 4 and 20, and I sold them for 861 today. This was a 3-day swing, and this brought profits for around 1,300 bucks. So always looking for those opportunities, guys. I will continue to share my strategy with you, and as always, if you have any questions of how I do it and everything, just bring them on and we can discuss. So thank you so much for watching, guys, and have a good one.